Hello, this is Nathan Carlson, president of 24HourFlex.com, coming to you from the 24HourFlex studios. And today we're going to talk about cafeteria plans. These plans are known by a variety of different names: flex accounts, FSAs, flexible spending accounts, but they're all names for an employee benefit plan that saves significant taxes. The tax savings can be very large. Let's look at an example. Someone with an adjusted gross income of $50,000. The federal tax rate would be 15%. Here in Colorado, the income tax rate would be 5%, and Social Security is 7.65. So you add all these together, total combined tax rate of 27.65. Now take that and apply it against a flex contribution of $1,000, and you'll create tax savings of $276. Significant. Now, what are the rules? First rule is you can only enroll at certain times. If you're a current employee, you can only enroll prior to the start of the plan year, or you can enroll during the year if you have a change in family status. Now, if you're a new employee, you can enroll when you first become eligible. Check with your Human Resource Department or obtain a copy of your plan's summary plan description to tell you when you are first eligible for your cafeteria plan. Once you are eligible, you can complete the enrollment form available from your Human Resource Department. Remember, the enrollment decision that you make is a binding decision. It's good for the remainder of the plan year unless you have a change in family status, such as birth, death, or adoption of a child, change in your legal marriage status, which includes marriage, divorce, death of a spouse, legal separation or annulment, termination of employment by you or your spouse, change in your work schedule, including a reduction or an increase in hours worked by you, your spouse, or dependent, or any other change in employment status that affects eligibility for benefits, or a change in the eligibility status of your dependent, a change in residence or work site of you, your spouse, your dependent, which is accompanied by a gain or a loss of insurance coverage as a result of the move. Then you can have a change in daycare providers, resulting in a significant change in daycare costs, or simply a significant change in daycare cost of your current provider. If any of these things happen, then you have a change in family status. When that happens, you can either enroll in the plan, you can leave the plan, or you can modify your existing enrollment. There are two different flex accounts, a medical flex account and a daycare flex account, and the rules are slightly different for each of these accounts. You can choose to participate one or in both of the flex accounts. However, money cannot switch between accounts. You can't move money from the medical to the daycare or vice versa. Once you enroll, here's how the money flows. Following each pay period, a portion of your annual election is deposited into the flexible spending account. And out of that account, money is used to reimburse eligible expenses. What are some of these expenses? Well, they're numerous, but I will highlight just a few. Doctor visit charges, insurance co-pays, your prescription drug charges, over-the-counter drugs, and these are numerous, such things as Band-Aids and antacids and Tylenol and aspirin, just to name a few of the over-the-counter drugs. Dental expenses, such as exams, fillings, x-rays, orthodontia, and braces. And I want to point out that dental expenses are ideal expenses to run through a medical flex account because they typically are known by you ahead of time. Vision expenses, including exams and glasses and contact lenses, and even the contact lens solutions necessary to maintain those lenses. Those are all eligible expenses. Chiropractors, acupuncturists, and thousands of other expenses. You can go to your enrollment kit or go to the 24hourflex.com website for a listing of the many different expenses that are available and are eligible for reimbursement. Here's a listing of some common ineligible expenses. Vitamins. Vitamins are not eligible. Kindergarten tuition expenses, elective cosmetic surgery, toiletries and personal use items such as toothpaste and dental floss. These are ineligible expenses. Teeth whitening, unfortunately, that is not an eligible expense, plus the veneers that sometimes you can get. That is not an eligible expense. Expenses to improve general health, such as joining a health club, are not eligible. The maximum annual election is established by each employer. So you need to check with your employer or your human resource department to determine what the maximum annual election is for the medical flex account. Your maximum reimbursement will be your personal annual election less your year-to-date reimbursements. That will equal your maximum reimbursement at that point in the year. Let's look at an example. Let's say that you enroll in the medical flex account with an annual election of $1,200, and then mid-year through the year you've already been reimbursed $500. That would leave a maximum reimbursement of $700. Now, why is this important? The important point here is that the reimbursement is not limited by the contributions that you have put into the plan year to date. It's limited only by the annual election less year-to-date reimbursements. The daycare rules are also very important. The first rule is that the daycare expense must be incurred to enable you and your spouse, if you are married, to be gainfully employed. Second, the daycare expenses must be for the well-being and protection of a qualified dependent, which is someone who is under the age of 13 or someone who is mentally or physically incapable of caring for themselves. The daycare provider can be someone that provides that care at their home or a daycare center. However, they must be licensed if the care is provided for more than 6 individuals that are not residing at the facility. Also, the expense cannot be paid or payable to a child of yours who is under the age of 19. The maximum daycare election varies with your filing tax status. If you're married and filing jointly, or if you're single, the maximum daycare election is $5,000. If you are single and filing separately, the maximum daycare election is $2,500. However, in either case, it cannot exceed your income or the income of your spouse. The maximum daycare reimbursement is the amount that is available to you in your flexible spending account. In other words, the amount that is available to you is what you've contributed year to date, less what you have been reimbursed. There's no double dipping. For those of you that have daycare expenses, you know that there's a tax credit, and generally you have to choose one or the other. Let's take a look at an example, because in most situations, the daycare available through the cafeteria plan will be a far better tax benefit to you than the daycare tax credit. Here's a rule of thumb. If your gross wages, including your spouse's, exceeds $20,000, choose the cafeteria plan. We do have a tax calculator that's available on the 24HourFlex.com website. You can go on that website and put in your information and calculate your tax savings.